Hello everyone, friends. You're on the Crypto Deal channel and we have a new episode. Bitcoin is approaching another important zone on the chart, but at times like these, I'm not interested in long-term forecasts, but what the market is showing right now. Before opening any position, I answer 3 questions for myself. What will confirm that the initiative is shifting to buyers? What will show that the advantage remains with the sellers? And at what point will my idea no longer be relevant? This approach helps in making decisions without unnecessary emotions. And in this episode, I want to tell you about an exchange that is worth paying attention to. Don't forget to join our community. Kalshi is a CFTC-regulated American exchange and the first CFTC-approved platform in U.S. history to offer perpetual futures for eligible American traders. After passing identity verification and opening a margin account, the user gets access to cryptocurrency perpetual futures on a regulated American platform. What are perpetual futures? Perpetual futures, or Perps, allow you to open a position on the rise or fall of an asset's price without buying the cryptocurrency itself. Unlike classic futures, there is no fixed expiration date here. As long as the margin requirement is met, the position can be closed at any convenient time. That's why many market participants consider Perps to be one of the most convenient tools for short-term trading. I'm often asked how I approach trading through Perps. The answer is always the same. I never start by choosing the leverage. First, I analyze the chart. For example, if Bitcoin is testing a strong resistance level, I first look at the price reaction. A confident breakout followed by a successful retest can confirm a growth scenario. If the price gets rejected and loses an important support level, this can confirm a decline scenario. The position should follow the market structure and not the other way around. Only after a clear scenario appears do I think about the position size. Perps also allow the use of a multiplier, and this is exactly where the risk increases. Imagine a simple example. A trader uses collateral of $1,000 and chooses a 5x multiplier, getting a position of $5,000. If the market moves in their direction by 5%, the change in position is significantly stronger relative to the initial collateral. The same works when the market moves against the position. The multiplier equally amplifies both a positive, favorable result and potential losses. If the market continues to move against the opening, against an open position, liquidation may occur. That's why determining acceptable risk before entering a trade is much more important than choosing the maximum possible multiplier. I also predetermine the level after which my trading scenario is considered invalid, and it's exactly what helps me choose the right position size and overall risk level. Kalshi offers take profit and stop loss tools which help you predetermine your exit plan from a position. They can reduce the impact of emotions, but they don't guarantee execution price and don't eliminate risk during high volatility. Another parameter worth paying attention to is the funding rate. Since perpetual futures have no expiration date, this mechanism helps keep the contract price close to the underlying asset price and can affect the cost of holding a position. My approach is very simple. Define a key level, form a trading idea, understand where it stops working, assess acceptable risk, and only then choose the position size and multiplier. It's important to remember that regulation does not eliminate market risks. Perpetual futures involve a significant level of risk and are not suitable for everyone. Using leverage amplifies both positive, favorable position movements and the possibility of losses, which can exceed the initial deposit. And as you can see, this is a pretty interesting exchange. But the most important thing is that it's not just an exchange, but an exchange regulated by the CFTC. So at the very least, the project deserves attention. And with that, our episode is coming to an end. Finally, of course, don't forget to join our community and write in the comments what topic you want for the next episode and which coins you expect to grow. We'll wrap it up here. See you soon. Talk to you later.